Hello everyone. So today we are going to learn how to make your cash flow statement. In the previous videos, I hope you have watched all those videos about general entries, how to create this general entry, and how to create a ledger, a fully automated ledger. Like if you want to check the cash ledger, here's the cash ledger. If you want to check the cost of goods sold, you can see it. How to check the electricity expenses, you can see all those ledgers separately, and even you can see all those ledger uh, in just one go. You have to just eliminate this, and you can see all those ledger we have created about. And here we have created the separate heads as well for the assets, expenses, equity, liabilities, and the income as well. So in the next phase, we have created a trial balance from our ledger accounts, and that is perfectly linked with the ledger. And then later on, we have created a profit and loss account and then balance sheet. These are the two main parts of the financial statements. And now we are going to start our cash flow. Before watching this video, you need to watch the previous video, about the cash flow, the first video about the cash flow. That is the basic video. So in the next one, we're going to create a next video on our cash flow. So let's start our video on the cash flow statement. As you know, the cash flow is the third major statement in our financial statements. First one is the profit and loss, balance sheet, and then our cash flow statement. So in the cash flow statement, before going forward, you need to understand the few basic concepts of the about the financial state about the cash flow. Like over here, you need to link the net income. We are going to create this yearly cash flow statement. In the next videos, we are going to create the monthly cash flow statement as well. The both are about similar concepts. In this, we are going to take the balance from the year-end balances, and in the monthly cash flow, we are going to take the balances from our monthly financial statements as well. So over here, I'm going to link this profit. I'm going to link it again. So net income, from where you will get the net income, you need to go to the profit and loss account, and the last line will be the net income. So you just link it with the net income, and then you need to add back the depreciation or all the non-cash expenses. For example, depreciation or the amortization, if there is any, then you have to add it back to the cash flow statement as you paid nothing for this. So that we will be on net income. And the second one is operating activities. There are three basic elements in the cash flow statement. First one is the operating activities, and then cash flow from the investing activities, and then cash flow from the financing activities. What do you know about the operating activities? It means the day-to-day working, the current assets or the current liabilities. So we have to take the net of current assets and the current liabilities. And the second one is cash flow from the investing activities. Investing activities means if you have invested amount in any of the assets that is going to be used for more than 1 year, means that is a fixed asset. For example, if you purchase the furniture, like in our examples, or if you have purchased the land, or you have purchased a building, a car, anything that is going to be used for more than 1 year, that will be uh, included in your investing activities. Then what do you know about the cash flow from the financing activities? Financing activities means if you have bought any type of loan from the bank, from any person, that is going to be paid in more than 1 year, that is a financing activities. And the equity means if you have borrowed amount from the owners of the company, that will be included in the financing activities. So let's get it started. And after completing all those balance, we have created a check over here. If the check is zero, it means that our financial statements are our cash flow statement is perfect. There's no mistake in the financial statement if the check is zero. So let's get started. So as we are going to create the year-end balances, so what you need to do is you just need to over here, like in the inventory, we need to check what is the actual difference created in this year from the last year. As you know, we are going to create this cash flow for the first year company. So we simply just go to take the inventory balance from the balance sheet for this year. Here is the inventory for this year, and less. we need to take the previous year balance. So there's no previous year. We are just going to select 0 minus 0 as there's no balance for the last year. That is simple. We're just going to create a short example for you so that you will be understanding this. For example, year one balance, we are going to create it over here. Let's take an example for year one, year two, and we are just going to take an example for the inventory. For example, you can see that I'm just saying that there is a balance of 50 millions in the year one and the 100 millions in the year two. So what formula you are going to use in the cash flow statement to get the answer? You just need to take the second year balance minus first year balance. So first thing you need to do this. Okay. For example, there's a change of the 50,000 from the year one to the year two. There's a change of the 50. It means that in the year two, the inventory balance is more than the year one. It means you have paid the cash for to get this inventory. And if you're paying the cash is going out from the cash flow. So you need to just press the negative sign over here. So just go to the formula bar and press first year. Now this will be negative 50. It means the minus 50, the 50,000 cash is going out from our balance sheet. So let's get to our balance sheet over here. You can change this plus sign to the negative sign from the formula bar and this negative sign to the positive sign. Okay, this is perfect. Now what you need to do, just we need to fix the cells. And as you know that the vendor balance, that is the liability for us. And if the liability is increased from the last year to the current year, it means that you have buying the goods, but you are not paying for that. The cash is not going out. So you have to come over here and see if the liability, if there is cash in, if the liability is increased. If there is a liabilities increase, means maybe you have borrowed the amount from the short-term amount. If the liability is increased, it means you have borrowed the amount of your, or you are getting something in the cash, or for the liabilities, you're getting something in cash, or you're buying something that you have to pay for. So let's just link this to our balance sheet. Go to the balance sheet and our current liabilities. As you can see, the balance sheet item is going to be shown in the positive form. So if it's you can see the credit balance is actually a negative form, but in the balance sheet we have just show as you know we got that the liabilities are in the negative form, and you need to subtract the recent year, that is 0. You press enter, and this balance will be in the positive form. This 100 balance will be in the negative form. And why this is in the positive form, I hope you have get this point, as if the liabilities increase, it means there is a cash in. If the cash is in our business, then the cash flow will be in the positive format. Yes, if the balance sheet item, this will be in the negative form, then we have to use the exactly this formula. Okay, so let's go to the our cash flow from the cash flow from our financing activities or investing activities. Over here, we are going to create a formula that will just add these two. That's plus this. And we are going to link this cell with this. Okay, just go to cash flow from our furniture. Furniture is a non-current asset. And the similar formula we have used over here will be used in this, in the assets from furniture assets, like press the negative sign, go to the balance sheet, select the furniture plus 0. As why I'm going to get the 0, as there is no balance in the first year. If there is a balance in the previous year, then you have to take that balance and then just press enter, And over here you can link. I'm just going to directly link it with this. And over here in the last net cash flow from our financing activities, we're going to take the loan. As a loan is a liability, then what you need to do, you just need to understand this formula in the vendor MJ, Mr. J. You have to take the formula exactly like this. As the cash is in, if the loan is increased, you go to the balance sheet. From the current liabilities, the loan is 10,000. That is non-current liabilities. Current liabilities and the current assets will be included in our cash flow from the working capital, and the non-current assets will be included in our cash flow from the operating activities and the cash flow from the investing activity. Sorry, cash flow from the investing and the cash flow from financing activities. So owner's equity, the same formula will be used for the owner's activities. Just go to the balance sheet, select the owner equity, that is this one, less 0, press enter. So this is the cash flow from the operating investing activities, and this is cash flow from the, we're going to add these two, loan plus this one, press enter. Now we're going to link both these, just press enter. Okay, so here's, we have created a formula where we have added the net income, net operating cash flow from the net operating cash flow, net investing and net financing activities. So over here, you need to enter the beginning balance if there is any beginning balance in the cash flow in the financial statements. For the cash flow ending balance for the last year, you need to enter that balance. If there's nothing, then just press 0. And over here, we have created a formula that will calculate the change. And how you will get the change means closing balance less opening balance. Here is a formula: closing balance less opening balance, that will be change. So the total ending balance is 2,14,000. How you will get this right? Just go to check this balance less. Go to the balance sheet, and the cash is like this is a closing cash for the year end 2023. Just press enter. If this the answer is 0, it means that you have created this cash flow statement perfectly. There's no mistake in this financial statement. And if this answer, if this check is not 0, it means there are some mistakes, so that you need to edit the cash flow. Now we're going to go do some little bit formatting. So how you can do the formatting, just press Ctrl+1, and from here you can go to the borders. We are going to select the top border. Here's the top border, and bottom border, double border. You can press OK. Okay, I think a single border is enough for those. Here we will also need to enter the top border, press OK. You can also do one thing, just copy this format, go to the format painter and paste it over here. Again, go to the format painter, and if you want to paste it anything over here, there's only one value, so that's why I'm not going to enter the bottom. I hope you have liked this video. Like, share, and subscribe for more videos. Subscribe to our channel so that you will get all the notifications on time. Thank you.